Welcome to Nasdaq Trade Talks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, a regulatory landscape, and capital markets. I'm your host, Jill Malandrino, and joining me this afternoon is Kevin Davitt. He's head of index options content at Nasdaq. We also have Justin Zacks, vice president of strategy at MooMoo, and we're here to discuss the growth of retail volumes in Nasdaq-100 Index Options, also known as the NDX. MooMoo and Nasdaq have sponsored a paper trading competition to help new and current option traders level up their understanding of the markets, which included education on index options. Justin, tell us a bit more about the competition and what participants take away from events such as these.
Sure. Thank you, Jill. The challenge runs from January 13th to February 7th, but it's not too late to join in now. Each participant gets $200,000 in virtual money, and they can trade stock options, ETF options, index options on U.S. exchanges. And they also have the ability to use margin as well as sell options short. Winners will share $15,000 in cash rewards, along with some great other additional prizes like Apple products. And what they really get is this practical knowledge. So much investor knowledge is this theoretical knowledge, what you learn in school, what you're learning from a video. It's not about doing. So this is really about getting in there and doing it without risking your own money. And it's not just for beginners. So a lot of people are already trading options, but maybe they're not doing stuff like complex spreads. This is a great opportunity to test those spreads out, see what the movement looks like in terms of a lot of the Greeks without risking their own money, get more comfortable with doing some of these complex options.
Yeah, Kevin, I got to get in on this. I haven't done an options trading competition in a while, but tell us, follow up on this. What is this going to give retail investors or investors of all types?
Yeah, I think Justin explained that really well in terms of bridging that potential gap between the practical and the theoretical. And one of the things that, thinking more broadly, excites me about the industry and my role is seeing the demographics that I interact with and how they've changed through time. So I've been advocating for like the informed use of options, educating about index products for a decade now. And I think back 10 years ago, most of the conversations were with men that were between 50 and 70, and that's nothing against that demographic. I'm kind of quickly approaching that marker. But if I compare that to events like the one we put on this week and other things that I'm part of in 2025, we're talking with lots of women, with college students, with new grads. We're talking about younger people that are thinking seriously about how they can start to grow and protect capital using options. I think that's amazing. And then I think about the Nasdaq-100 Index, which, as we all know, has been an outperforming, a growth engine for 2 decades now. And I think about my kid who's 10, and I firmly believe that the Nasdaq-100 is becoming that index for the next generation. It's the type of exposure that the market wants, and the NDX or XND options allow end users to really customize their risk profile.
Yeah, they certainly do. And Justin, retail platforms are increasingly making index options available to all their users. And historically, index options have been viewed as institutional tools. So tell us what the MooMoo perspective is with respect to index options, because I wouldn't call retail the dumb money anymore. The tools out there are pretty incredible.
Yeah, absolutely. And, we introduced index options a few years ago. And I think there is a view from some retail traders that they're institutional tools, but we're really trying to re-educate them about that, because used responsibly, index options can often be easier to use than ETF options. For instance, in terms of cash settlement versus physical settlement, it's just so much easier to understand and use cash settlement and not worry about having to take possession of an underlying ETF or an underlying stock. And then you have the European exercise. Most index options are European exercise. So it means traders are not going to have to worry about early exercise. There's really a lot of traders now, that we see are really catching on to this, some of the advantages of index options, and the growth is really there. And even in particular, the tax advantages. There are certain tax advantages in terms of being 1256 contracts, and they're catching on to that, and they're saying, wow, these index options, I want to learn about them. And MooMoo offers the types of educational tutorials to teach people, along with Nasdaq, how to use index options.
Yeah. So Kevin, I want you to follow up here and lift the curtain back from Nasdaq's perspective. How is your team, how are you thinking about the growth of retail volumes in the NDX?
Justin nailed it right there. But if I'm looking through the exchange lens, we kind of do have a unique view into the user base across products, so index as well as multi-list products. And I would agree that historically, index products have generally been considered institutional in nature, but that has clearly changed. So, give an example in the full-sized NDX complex. Individual traders make up about 40% of the overall volume. And that mix between institutional and individual has remained stable for the past 3 years, despite really, really big growth in the product overall. Visually, you can see retail volumes in NDX. This is going back 2 years. Based on average daily volumes, retail participation is up nearly 2x since early 2023. That's amazing. It echoes what Justin has mentioned. And then if we look at the broader picture, the total NDX average daily volume, those have more than doubled over that time frame, very similar growth pattern. Now, just to elaborate a little bit, most of the options trading in NDX is done on a spread basis. So both institutional and individual end users are gravitating toward these defined risk exposures. It allows them to access a product like this one with roughly 2.1 million in notional exposure in many situations, defined risk way. For more granular or maybe more directional exposure, we see volume in XND, which is our 1/100th micro product, continuing to grow. And whether we're talking about retail or institutional, Justin mentioned those handful of traits that many traders are growing accustomed to and valuing: the short-dated maturities, cash settlement, no early assignment risk, and that potentially favorable tax status. I think challenges and the educational event like we've done with MooMoo are really great ways to call attention to the product and those potential benefits.
Yeah, and let's wrap up the conversation. I know what both of your perspectives on this, starting with Justin. We had January expiration this morning, so you have lots of options and gamma exposure coming off the board. That volume continues to roll out. But by the way, we have the inauguration on Monday. The markets are closed, by the way, and then we're coming into the heart of earnings season. So what are you thinking about as we go through what could potentially be, volatility events?
Yeah, I think you're seeing a little bit of that today. You're seeing the markets advance, I think, for several reasons. The economic data is now behind us, particularly CPI. It was a little less benign. People are now not as worried, and we saw volatility come in just a little bit, and we saw long bond yields come in, and they've kind of been pretty flat today. Bank earnings have been very good. That's another reason people have kind of been buying. And then some traders, I think, are pretty optimistic about what the new administration might do. And then a lot of the shorts, they're a little bit worried that something might happen, particularly, like you said, there's this long weekend. So even though there's this long weekend, usually you'll see volatility come in for the next few weeks, and that really hasn't happened. We've seen a little bit of drop off in volatility, but not as much as you might expect. You might see some traders rolling their calls out a little bit further on hopes that you're going to get some type of spark from the administration, even something more benign where you don't hear that much, and it's a really easy transfer of power over, might even spark a rally. So I think there's a lot of different views out there going into this weekend.
Yeah, Justin, what's interesting too is it wouldn't surprise me if we were to see some executive orders come through as well, right? And so I think that's also something we should be aware of. But I want your perspective as well, Kevin, as it relates to earnings. Those underlying names in the Nasdaq 100 are responsible for a big part of the market narrative as well.
You're absolutely right there. And next week we'll kick that off as far as the NDX is concerned. X financials, so the banks didn't really impact the Nasdaq 100. Justin mentioned that we've kind of regained some footing following a decent CPI number earlier this week. If you are technically inclined, you can see visually that the Nasdaq 100 has moved back above its 50-day moving average. So from a technical perspective, that could be viewed positively. This rebound, the most recent one, has been a bit broader based, so not just focused on those handful of names that we talk about so often. As we move into earnings season, I think it's interesting to note, Jill, like you sort of referenced, that the constituent volatility, So the single name securities that make up the index arguably appear relatively expensive when you look at the index vol, and that's based on a historical relationship between the two. So the options market is potentially telling me that they're pricing significant dispersion within the index over the next few weeks or months. That is not unusual during earnings, as some names outperform, some under, and it balances out at the index level. We're going to get that first big NDX number and report on Tuesday with Netflix. For whatever that's worth, the options are pricing an expected up-down range of 8% for Netflix. And then if you do look at the sort of corollary with the NDX, the 1 week options there are pricing a range of plus or minus 1.8%. That's fairly typical over the past couple of months. So I think the next couple of weeks should be very, very interesting and heavy on the options volume.
It's going to be amazing with the competition starting up soon as well. Appreciate both of your insights. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.